I too would like to acknowledge the Gadigal people and pay my respects to elders, past and present, and also acknowledge all Aboriginal and Torres Strait Islanders in the room today. Certainly would like to thank the Wild West table over there for allowing me to listen to their ideas and solutions, which was terrific. I've got a slide pack, and it's generally about what IBA does historically and more excitedly what we can do in the future. I tend to have a process, and I follow the slides, but I usually trick myself and go all over the place, so we'll give it a crack. Firstly, IBA has three main areas that it looks after, and it's obviously the home loan area, the small business area, and our investment area. But more importantly, our vision is to provide economic independence and ensure that First Australians are an integral part of the economy, and they accumulate wealth. And we have a huge amount of different areas that we try and do that. But home ownership, as you know, it's bandied around quite easily. That's an easy thing to do, but it's bloody tough. It really is hard. And currently we have 4,602 active loans on our book, which is fantastic. The home ownership program has been a long-standing government program in Indigenous affairs, about 35 years old, and has lent or has given loans to Indigenous Australians, 17,000, which equates to 56,000 Indigenous Australians in homes. So that's quite significant. This slide's not quite right. It says 37%, but it's actually 31%. So it's about a 30-70 split from Indigenous Australians to non-Indigenous Australians who own their home. And that number, I'll be very interested to see the number in New South Wales. The barriers to home ownership. We all know what they are: low income, low earnings, credit impairment, and that's a significant point. Is it's easy to get credit. It's certainly hard to pay it off, and we've talked about it before. It's about limited experience with home ownership, or not thinking about it, or not being part of the culture of your family. So historically, or our numbers are about 96% of our loans go to first homeowners, and they're setting the standard for their family and generations to come as being homeowners, and it passes down to their kids. Additional barriers are remoteness, or in remote communities are lack of financial institutions, and we all know about the construction costs and repairs and maintenance costs remotely. And the further out you go, there's a limited market. There's no secondary market a lot of the times, or it's very limited in stock. So as part of our product, we see ourselves as a stepping stone into the mainstream lender. If our customers can go to a bank, a mainstream bank, and access finance, we let them do that because we have limited funding. Just to give you an idea, we do get appropriation from government to lend for home ownership lending, and it equates to $22 million a year, which isn't a great deal. This year, our budget lending is $210 million. So part of our legislation is all our money that comes back into our small interest rate, and our revenue comes back into home ownership. It's just a cyclic pool, so we don't spend it on anything else. It all comes back and builds and builds and builds. So it's very important that when we invest in our customers for a loan, they need to make that commitment back, because that then helps the next wave of homeowners. We also we have a standard product, much like a bank, but we have lower interest rates, lower deposits. And as we all know, everything's income based, so we have tiers of income, and it was fairly close to that, but I think it's the age-old problem of trying to pick the right income amount and work out the rates for that. So we have about 5 categories: low income, very low income, middle income, and we don't like to say high income because it's still not high. And we base our income on the total family, the total gross income of that household. So if mum and dad are working, it's a combination. If there's mum and dad and brother in the house and they're all working and they're all on the loan, that's what we use. So, and I've got some modelling at the back end of the slides that just show you how we assess that. We also have a remote Indigenous home loan, which further assists in designated areas, remote areas, and New South Wales has quite a large area, that we give a grant component to the establishment costs of entering into home ownership, like your legal fees, your building inspections, your valuation, etc., your conveyancing fees. In addition to that, and this again is based on income, there's a up to $20,000 repairs and maintenance grant that sits against the loan. And I'm sure everyone will agree that there is some significant repairs and maintenance that needs to go on when you're transitioning, and we talked about transitioning from social housing to home ownership. That'll if the hot water service goes in week 1 and everyone's busted, they've got no money to fix it, that's what that's for. Also, or your solar or anything like that. So that's pretty popular. We've just actually extended our area. I guess we use the ARIA index for our remoteness. And again, that's a lower deposit rate. But again, for our lowest income earners, about 42,000, the starting interest rate is 1%. The starting deposit is 1,500. And like I said, I've got some comparisons at the back so you can gauge on just how much a loan repayment is over the term, so you can work out what your tenants are paying in rent and if they can transition in. There's our breakdown of where we lend, and obviously regional and remote is major. The Minister thinks we should lend in remote only, and we all know that's a tough ask, and he doesn't think that people in the cities are disadvantaged and need home loans. So again, that model at the back will show you just how difficult it is if you live in Sydney or somewhere that housing prices are equally unaffordable. So it's an interesting conversation. So here's our process. Again, we have to have an expression of interest and an application. We are across Australia. We have about 40 lending staff that services the whole country, so they are very busy. And I should have qualified at the start, IBA's been around for a while. We've been a bit archaic in our processes and systems, so we're improving that. We think we're doing a good job. Yes, certainly we can improve, and we are doing things differently to speed up our process, be a bit more advanced in technology. And it might surprise you that we've moved away from a paper-based application system. We're IT dinosaurs where we come from, and that's had a significant impact on applicants accessing or expressing interest. So it takes them about 10 minutes now to fill in a form, and it's registered straight through. Before, they used to have to print off a form, fill it out, send it in via the mail or email, and so that's had a profound effect on our interest, which is great. We assess for affordability, and the 2 slides at the back will show you what we look at. And we talked about it on the table. Sometimes it's about, and our CEO who's now gone, or Deputy CEO Wally Tallis, who talks about, historically we used to say, yes, you can go through, or no, you can't, you need to do something. So part of our process is about capacity development. And we talked about setting up educational processes, setting budgets, and articulating just how difficult home ownership is. The extra burden that you've got to pay for rates, you've got to pay for insurance, you've got to pay for repairs and maintenance, you've got to actually use all that stuff, you lose your CRA. So it's a huge impact, and part of that is how we assess. So it's not an easy thing. Again, 2 loans currently, and we'll talk about the third option that we don't do, because historically we've lent to individuals, but we now have the capacity. We want to build partnerships with community housing organisations to allow you to leverage your assets to build more assets. So I think it's in its infancy. I'm sure I'll get some interest from folk in the room, which is great. And like we said, we haven't done anything yet, but it's about building those partnerships. What do you guys need from us? It's about, trying to help you guys build and maintain sustainable housing for your mob. And the exit is mainstream banking. If you can, our customers, I think on average is about 9 years they transition into mainstream, which is fantastic because our general term is 32, and that's because they build enough equity or they've got some capital growth. And that's perfect, because while they transition out into mainstream, they may have extra services we don't offer, like redraws or other accounts or credit cards, God forbid, or whatever they do. They can do that, and then that gives that money back, and it starts again for the next wave coming through. So I've got a case study. This is just a loan that we pulled out recently. So it's regional New South Wales. The house cost is $285,000, and you can judge whether that's realistic. There's cheaper houses, there's dearer houses. It's a $3,000 deposit this customer had, so the loan is $282 at 3%. The 32-year term, so their monthly repayment is about $1,140. This particular family has 2 adults, no kids. Their total gross household income is $82,000, and that could have been split 50-30, 40-40, it didn't really matter. They have consumer debt of 17% of their total household income, which is could have been a car, a fridge, a couch, a TV. It doesn't really matter what it is, but that's a commitment they need to pay. Our loan is equally as much, so you can see that their consumer debt is equal to the household loan repayment. So their debt is $2,310. So we take that into account. We don't just say, can you afford the home loan? It's about what else you need to pay, because invariably that's what will bring you unstuck, and we'll have to help out and try and manage that loan. And importantly as well is our surplus. So $943 per month is surplus. Sounds terrific, doesn't it? Till you pay rates, till you pay insurance, till you feed your kids, till you put petrol in the car and pay rego. So something has to give. The lifestyle, that's part of this education, that it's a whole change. And whoever's buying a house will know that you're forever seeming like you've got no money left. And at the other end of the spectrum, look at this one, and this is not too unrealistic. I don't know how close in Sydney you've got to go to get a land buy and build, but $770,000. These guys had a nearly $30,000 deposit, and that can be part of your first homeowner grant and all that sort of stuff. So that's a contribution to that. Again, 3%, 32-year term. That monthly repayment is nearly $3,000. Their total household income is $109,000. So again, that could be a split, mum working part-time, getting some benefit. Consumer debt much lower, but the IBA loan is nearly 30% of their income. So total, which we assess, is at 36%, which is just at our higher edge of trying to delve in and make sure everyone's okay, part of that education process. Their surplus is much higher, but I'm sure the cost of living will be a little higher as well. So that's just 2 scenarios about, you can take that back and think, $1,400, is that more than what we're paying in rent? Can we talked about setting rent. If we want to have a transitional program, how do we do that? The closer your tenants are to paying that amount, it's an easier transition. But I want to emphasise that you guys do some fantastic transition programs and education programs. When we partner with you, want to tap into that. We don't want to recreate or do it our way. You know your mob, and we want to work with you. And we can, and always, I mean, IBA's pretty much been isolated in the past, just doing things their own way. But I think we're changing our mindset to leverage with partners to do things together, because we all know how hard funding is to get, how expensive everything is. So if we're doing it jointly, we can work out and get the most bang for buck. That's our web page. Richard is down the bottom here. Some of you know him. He's going to be around tomorrow as well. So just go and grab him, get his card. He will show you our calculator, our home loan calculator, which is online. If we have time, we can do it today. But and that's about a self-assessment, so anyone can go and type in their income and see what the repayments are, and that's just one of our tools we have. But that's me. Thank you.